Hi, it's Greg Watson here from the Investor Hub. Today I want to explain a little bit about family pledge loans. Family pledge loans are an option that's available to borrowers to get into the property market where they don't have a deposit, but they do have a parent or a family member or even a close friend who's willing to put up a property or part of a property as security to help them get into the property market. And typically it's been used for parents to go as guarantor for their children to buy their first home, but it can be used in other situations as well. So how it works is that the bank normally takes an 80% security against one property and a 20% security against the second property. So if you're buying a $500,000 house, they'll take $400,000 security over one and $100,000 security over the other. So you're actually funding 100% of the property purchase. In some cases you can actually take that higher, you can take it to 115 or 120%, and the bank will be willing to fund the costs, including stamp duty and legals, and include that within the total borrowing as long as the security is up to the mark for them. So what sort of property can be used as a parental guarantee or family pledge? So normally it would be a standard residential dwelling. You're not going to be using a commercial property or an industrial property or a large rural property as security for a loan such as this, but you can use a standard family home as part of a family pledge situation. So if you're entering the property market for the first time, either as an investor or as a home buyer, you can use a family pledge situation to allow you to facilitate that transaction without you having to have a deposit. It's a good way for people to get into the property market for the first time, but also avoid lender's mortgage insurance because there's enough collateral to cover the bank's requirements without having to go to a mortgage insurer, which would be the case if you were borrowing 90% of a property. You would also have to have mortgage insurance as well. But in this case, it works without it. So traditionally, family pledge loans were only available for first home buyers who were entering the property market for the first time. Mum and dad would go as guarantor for their children, and both the properties would be involved as security for the loan. However, now, as well as being able to be used for owner-occupied dwellings, the family pledge situation can be used for investor properties as well. So parents can put up a property as partial security to fund their children or a close family member getting into an investment property as well. So it can help not just in entering the property market for the first time, but also to grow wealth and to build a property portfolio. If you want to know anything else about that, please give us a call. We've got plenty of experience with family pledge loans across a number of lenders, and you can call us on 1300 651 363 or email info@theinvestorhub.com.au. Please get in touch and we can give you some more information on that. I'm Greg Watson. Bye for now.